Ladies and gentlemen, more than any other stock in the past month, I have been purchasing BMNR. I mean, I've more than tripled my position in the last month. And in this video, I want to talk to you guys about the 5 reasons for why I continue to pick up more shares. First off, if you're a believer in BMNR, you have to be a believer in Ethereum. Ethereum has first mover advantage, meaning that Wall Street has already decided that this is the chain that they are going to continuously build on, which is only going to incentivize new developers onto Ethereum, because that's where the money and all the investment is lying. But then you're also going to see big investments like stablecoins continuously see new highs. Ethereum is the largest chain for stablecoins, and what seems like getting a new all-time high for total supply every single week. Who are these stablecoin holders? Well, it could be as large as the biggest banks in the world. JP Morgan is now developing a stablecoin on Ethereum. The biggest retail names in the world, Walmart, Amazon, also looking to explore and getting into their own stablecoins. They process trillions of dollars. It would help them if they could potentially cut down on costs by also getting into Ethereum-based stablecoins. Now, Robinhood is taking this a step further. It's not just stablecoins. They're looking to tokenize US stocks on Arbitrum, which is a layer 2 of Ethereum, and they already have about $8.5 million that is on US stocks for EU users. Still very small numbers, but it could be very huge. Bank of America calls Ethereum the new stablecoin rail. They really believe that Ethereum will be the big call. And honestly, with the amount of capital that names like JP Morgan, Amazon, Walmart, and Bank of America have, they decide who the winner is. And if that's not convincing enough, Alibaba and Alipay, which has 1.4 billion monthly active users, has selected Ethereum to be their layer 1 for their layer 2 project called Jove. They process trillions of dollars per year and just launched on Ethereum. Now, going back to the developer conversation, you can see right here that the active developers in 2025 is all leaning towards Ethereum and Ethereum-based L2s. If you end up looking at the new developers in 2025, it's heavily based, once again, in Ethereum. If you actually look at the rate of change here, Ethereum is skyrocketing and actually growing faster than their competitors like Solana, for example. So it's not like they started with a first mover advantage, but there's fast growing competitors. Obviously, Solana is doing very well, and I'm not anti-Solana, but Ethereum continues to pull away. And by far the largest company that is dealing with Ethereum right now just ended up hitting new usage heights. Tether, or USDT, ended up seeing the highest levels that they've ever seen in their stablecoin, which only furthers Ethereum usage. Now, all of this is great, all the companies building, but the real change happened whenever the Genius Act was signed into law. So it's a matter of regulation and new changes that can happen that could really put this into overdrive. For that, I want you to listen to Brian Armstrong, the CEO of Coinbase.
I'm here in Washington, D.C. again, fighting for your rights to try to get some market structure legislation passed for crypto. This would be foundational, just like we did for stablecoins a few months ago with the Genius Act. Market structure legislation protects all the other non-stablecoin crypto assets like Bitcoin and Ethereum. The Senate is strongly supportive of getting this done. The members that I met with on both sides of the aisle are ready to get this legislation passed, and there's draft text now being exchanged back and forth and with the industry for comment, which is great. We saw a lot of alignment today. Now, of course, this hasn't stopped the big banks from trying to throw a wrench into things, and they're trying to ban rewards on stablecoins. The members of the Senate who I spoke to, they're not going to let that happen. That was already litigated and decided in the Genius Act for stablecoins. They're not going to bring it up again. But barring these little details here and there, I think this thing has a good chance of getting done. I've actually never been more bullish on a market structure getting passed. It's a freight train leaving the station. So we're going to keep showing up and fighting for your rights.
This is a bipartisan issue where we're going to see real change for protocols like Bitcoin and Ethereum. I think that this is great. And like they said, they're not going backwards. They're looking to press forward. And I mean, even from the last movement that we saw from the Genius Act, Treasury Secretary Scott Bessent said that stablecoins could grow into a $3.7 trillion market by the end of the decade. But let's go ahead and listen to Brian Armstrong lately to see what they've been working on and how close we are to potentially seeing some real change here.
Hey everyone, Brian Armstrong here. I'm back in DC, and even though the government is shut down, the Senate is working hard on getting market structure legislation passed for crypto, which is great to see. I attended some meetings this morning with both the Senate Dems, the Senate Republicans, and I'd say they're 90% on the same page. There's draft text being shared back and forth between both parties. Both sides want to get this done. That last 10%, there's a couple remaining issues open, like, for instance, DeFi. We want to make sure that we're pushing to protect DeFi and all the innovation potential that can have, and that the centralized intermediaries in crypto like Coinbase should be regulated, not the protocols.
We are very close to potentially seeing the Clarity Act get signed into law. Brian Armstrong recently also said this: I've met with 25 senators in the last 2 days working to get market structure clarity done. I'm glad to report the urgency and momentum is high. I love the urgency and momentum, but it's not even the only regulatory tailwind that crypto is seeing right now. We ended up seeing the House of Representatives send out a message to Paul Atkins, the chairman of the SEC, saying Trump wants crypto in 401ks or alternative assets, which includes crypto. Make sure this gets done quick. Meaning you're opening up essentially a $10 trillion industry to allow more investment into crypto. Doesn't mean $10 trillion is going to flow into crypto, but it does mean a percentage will, and that's important. And just like the Alipay news with Jove, this is a worldwide phenomenon. The EU Central Bank is seriously considering launching their own euro stablecoin on Ethereum. Morgan Stanley is seeing all of these changes, and it's bringing real certainty to a speculative asset. So they're managing $2 trillion and saying, hey, to their financial advisors, you can put a percentage of your clients' assets into cryptocurrency, and we will be writing reports on how the industry is doing. Also very bullish. You're seeing E-Trade do this, saying we'll add purchases for Bitcoin, Ethereum, and Solana for multi-hundreds of billions of dollars worth of people trading on E-Trade coming in 2026. That's right around the corner. JP Morgan, as of October 24th, said we will allow Bitcoin and Ethereum as collateral for different loans, whether that's mortgages or other products that they can end up giving. They are looking at Bitcoin and Ethereum. Obviously, if they're going to be collected as collateral, they don't think that this is going to zero. They're starting to believe that this is a very real asset. Clear regulation brought us here, and it's exactly what's going to allow this to become mainstream. In order for BMNR to work, we need to know that digital asset treasuries just work. During these two different timeframes, Strategy ended up seeing Bitcoin's price accelerate by 10x, but then Strategy's own price change went up by 25x because the ability to go out and continuously raise capital for an asset that might be accumulating faster than the shares itself is worth a lot. So in order for a digital asset treasury to work, you need to be buying into something that you truly believe in. But if you think Ethereum's winning and you think regulation is there, this could be the strategy. Now, BMNR is also a digital asset treasury, but for Ethereum, and it's heavily beloved by Wall Street, being one of the top ranked names in all of public markets, which actually allows them a lot of liquidity, which then furthers the want to actually get into their stock and trade it. And there's really not another choice. If you look at any other digital asset treasury, none of them even compare to how great BMNR has done. I mean, this is completely a breakout chart, and it looks like BMNR can just continue this because they still have a premium MNAV, or market net asset value. And I would go as far as to say that Ethereum is actually a better asset to do a digital asset treasury on than Bitcoin itself. Now, this was a slide from SharpLink Gaming, or SBET, but still it holds true for BMNR. See, Bitcoin, the yield is 0%. There is no proof of stake. They do proof of work. And also, they do have a fixed supply, only 21 million Bitcoin, but Ethereum is inherently deflationary. If the amount of transactions on the Ethereum L1 is more than the amount of overall issuance of Ethereum, the total supply could actually be deflationary. So you're getting an inherently deflationary asset that's also yielding 3% a year and is probably one of the best new technologies to build tokenized assets, stable coins, and the future of finance on. And when I mean the future of finance, I really mean it. This is the largest total addressable market in history. SBET did a great study over time that as you secure more and more value into the Ethereum network, you're locking up supply. This actually increases Ethereum's market cap, bringing up the stock for the amount of activity that they're actually doing on the network. Then you end up seeing some of the smartest names in financial services, like Vlad Tenev, say, hey, what are you most interested in tokenizing going forward? He said real estate. That's a $22.5 trillion industry for investment properties alone in the United States. Goldman Sachs and BNY team up to tokenize money market funds. That's over a $7 trillion industry that's 100% investment grade. Then you look at SoFi, which, that name's near and dear to my heart. As we look forward down the road, we see the potential to tokenize SoFi's loans to make them more widely available in liquid markets in increments of dollars rather than tens of thousands of dollars, such that anyone can invest in loans just like they do equities. So he's potentially talking about democratizing loans for everyday investors. And this is probably going to happen across all financial services companies, leading to a $42 trillion industry that at one point will be tokenized. The high majority of that will be on Ethereum's network. And Vlad Tenev believes this. Tokenization will eat the entire financial system. Ethereum has the tools in order to do this. They've never seen any downtime, and they benefit from every dollar that goes into the network. SBET even said, well, we've locked up roughly $10 billion on Ethereum. There's essentially a $780 trillion market to go after in general, and they think that Ethereum's network just by 2028 will roughly be per token $15,000 to $40,000 of ETH if they can lock up roughly $2 trillion in stablecoins and $4 to $16 trillion in tokenized real world assets. But this is all Ethereum based, not BMNR based. In order for BMNR to work, you need Tom Lee. Tom Lee's the key here. Michael Saylor says it best.
Tom Lee has emerged as probably the most visible, influential spokesperson in the entire Ethereum ecosystem in a matter of months, maybe a matter of weeks. What does that represent? Well, first of all, they have $10 billion of capital. Second of all, Tom Lee is part of the Wall Street establishment. He was never part of the crypto establishment. You saw Wall Street merges with the crypto economy, capital flows because it trusts Tom Lee. And then the next thing you know, you have Tom Lee having conversations with the early Ethereum entrepreneurs, with the Vitaliks of the world, or, and the like. And what's interesting there is that entire movement becomes commercialized, institutionalized, legitimized, rationalized, becomes a bit older, a bit more credible.
Tom Lee is the person that has been changing the game recently. That's led them to become the second largest crypto treasury in the world, growing way faster than Strategy ever had at this early of this stage. I mean, we've only been in here a couple of months, essentially, and they've grown extremely quickly. If you're tying yourself to Ethereum, there's no other name that has come even remotely close in terms of the performance that BitMine's been able to do. They've been able to attract institutional money. They've been able to buy good dips, stay above MNAV, which allows them to continuously dilute and raise more money to buy Ethereum while it's still low. But those are my top 5 reasons for buying BMNR. Clearly, you have to be a believer of Ethereum in order for this to work. And Tom Lee is a great sprinkle on top if you believe in his vision as well. If you guys like this sort of content, make sure you guys hit the subscribe button down below. But until next time, bye for now.